Silver is having a moment. You wouldn't know it based on the headlines dominated by gold, but silver's performance this year has been nothing short of extraordinary. With the gold bull rush taking a breather in the post-election aftermath, silver too has slowed down. Analysts across the world are looking at gold's potential to breach new all-time highs, but the forecasts for silver appear to be even more impressive. The word encore did not originate in theater as appropriate as that would have been. It comes from the French language and simply means again, or some more. Linguists have traced its origin back to the Latin phrase hanc ad horum, which means at this hour. And how appropriate that we would be looking at silver at this hour to see if its returns from 2024 will make an encore performance in 2025. Silver and gold share a special relationship. Both are precious metals and both have certain intrinsic qualities that make them indispensable as a global currency. But silver has far more industrial use than gold, and this affects demand and price action in some interesting ways. It is well documented that silver prices tend to follow gold prices. If gold rises, silver probably will as well, though on a delay. And if gold falls, then it's common to see silver mimic its counterpart. Gold has made headlines all year for its meteoric rise to new all-time highs. Gold reached a new all-time high just below $2,800 per ounce in October of this year. This was the opening act of a bull run that began with the Federal Reserve Chairman Christopher Waller hinting at impending rate cuts in December of 2023. The push to its current all-time high occurred just before the US election for president and has largely been characterized as a fear rally amid the ongoing bull market. Nevertheless, analysts expect the trend to continue. Gold has performed amazingly well this year, and investors who bought during the lows of the last 12 months around $2,020 per ounce and sold near the all-time high would have seen a 37% return on investment. But silver's low point this year was around $22, and it's currently trading around $31.30 per ounce, representing a 42% return on investment for those who entered the market near its lows. There is always a delay between writing and publishing, so bear in mind that gold and silver prices may be different at the moment you're watching this video. Currently, gold is comfortably trading around $26.50 per troy ounce and silver at $31.30. The market analysts who provide forecasts publicly seem to be bullish on gold, believing it has only just begun a new cycle. Most forecasters are in agreement that $3,000 per ounce gold is likely at some point next year. The forecasts for silver are less unanimous, but consensus seems to be around $35 to $40 per troy ounce in the next 12 months. This means gold would improve by around $350 per ounce, while silver theoretically improves by about $9 per ounce. Although gold outperforms in absolute terms, silver would provide a superior return for investors based on its relative performance. If we invested $10,000 in gold and it rose to $3,000 per troy ounce, the gold investment would be worth $11,320. On the other hand, if we invested $10,000 into silver and it performed as expected, that investment would be worth $12,780, over $1,400 more. Such an outcome would mean that silver once again outperformed gold in spite of gold dominating the news cycle. Headlines among major news organizations have already begun to shift as the potential for silver to outperform is being realized by mainstream outlets. Heading into 2025, silver supply constraints could amplify its trajectory. Mining production has been steadily declining for years. According to the Silver Institute, global silver output dropped from 900 million ounces in 2015 to just 830 million ounces in 2023. With nearly 80% of silver coming as a byproduct from other metal mines, it's not as simple as flipping a switch to increase production. Unlike gold, which has a more established primary mining infrastructure, silver mining is highly dependent on the extraction of base metals like copper and zinc. Meanwhile, demand for silver, particularly for industrial uses, continues to grow. The push toward green energy has made silver a critical resource for solar panels, electric vehicles, and other technologies. The photovoltaic industry alone accounted for over 100 million ounces of silver consumption in 2023, and this number is expected to rise. This tightrope between shrinking supply and rising demand positions silver as a commodity under pressure, making significant price increases more likely. Gold, meanwhile, continues to be a bedrock of financial stability, with central banks worldwide bolstering their reserves. In 2023 alone, central banks purchased over 1,000 metric tons of gold, with analysts expecting this trend to continue into 2025. Unlike silver, gold is predominantly a financial asset, with less than 10% of its annual demand coming from industrial uses. This makes gold less vulnerable to economic shifts in specific industries. And global gold demand is set to remain strong, driven by central bank buying, inflation concerns, and geopolitical uncertainty. These factors contribute to gold's continued stability, but its price growth may be steadier and more subdued compared to silver's more dramatic swings. While silver's potential gains are exciting, it's important to remember its higher volatility compared to gold. Historically, silver has seen sharper price swings both upward and downward. If gold's bull market falters, whether due to new monetary policies, a stronger dollar, or reduced central bank buying, it's likely that silver would follow suit, possibly at an amplified scale. This interconnectedness is a double-edged sword. While silver benefits from gold's upward momentum, it also inherits its vulnerabilities if gold were to fall. Investors considering silver are weighing its higher potential returns against its increased risk. Diversification within precious metals, holding both silver and gold, can help balance these dynamics, providing exposure to silver's upside while relying on gold's stability as a hedge. All of this is only important to you as an investor if your primary concern is achieving a higher return on investment. But if you're holding gold or silver for a different reason, such as a hedge or a store of value, then much of this analysis is interesting but unimportant. Your goals will have longer horizons and are more about safety and assurances than they are about making money from an investment. And in that case, the good news is that both gold and silver are poised to perform their respective roles well. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.